let me know when you started it so I can read this, which is required by the current procedures.
It says it's recording.
Okay. As a preliminary matter, this is the Commission of Trust Funds, and I am the chair, Joseph P. Scalia. Permit me to confirm that all members and persons anticipated on the agenda are present and can hear me. Members, when I call your name, please respond in the affirmative. Hayden,
Here, Hayden Traub.
Daniel,
Dan Burns, I can hear you loud and clear.
Ann,
That's all right. Go ahead. It's just members. Just
Evelyn, okay.
Oh, yeah. Sorry, I thought you said Dan.
All right. All right. Okay, we're all here. Good afternoon. The open meeting of the Commission of Trust Funds is being conducted remotely, consistent with Governor Baker's executive order of March 12, 2020, due to the current state of emergency in the Commonwealth due to the outbreak of the COVID-19 virus. In order to mitigate the transmission of the COVID-19 virus, we have been advised and directed by the Commonwealth to suspend public gatherings, and as such, the governor's order suspends the requirement of the open meeting law to have all meetings in a publicly accessible physical location. Further, all members of public bodies are allowed and encouraged to participate remotely. The order allows public bodies to meet entirely remotely so long as reasonable public access is afforded to the public so that the public can follow along with the deliberations of the meeting. The public is encouraged to follow along using the posted agenda unless the chair notes otherwise. Ensuring public access does not ensure public participation unless such public participation is required by law. This meeting will not feature public comment. For this meeting, the Commission of Trust Funds is convening by Zoom app as posted on the town's website, identifying how the public may join. Okay, with that in mind, we're going to call the meeting to order, and we're going to go immediately to the agenda. And the first item is for us to review and approve the minutes of October 21, 2020. May I have a motion to accept the minutes of October 21, 2020?
This is Dan Burns. I'll make a motion to approve the minutes.
This is Hayden. I second.
Okay, all those in favor, please state aye prior to announcing your name. This is Joe, and I say aye.
Hayden Traub, aye.
Dan Burns, aye.
Okay, the minutes have been approved. Let's move on to the second item. And this is the review of the scholarships and with the Director of Finance, Ann Galati. And we have a question on the information that was sent to us, and in particular, the question surrounds the Charles and Bernice Siegel Memorial Fund Scholarship.
Yes.
The trust agreement talks about the income of the fund, whereas we have historically, since the very beginning, been delivering 4% of the corpus of the fund down to the nearest $1,000. The fund is quite large, as you know. It's in excess of $260,000 at the current time. And I have talked to the members of the commission back then, and of course, this was 13 years ago, and we cannot recall precisely a conversation with anyone from representing the trust, but we do recall several other items. We recall the fact that the money came in as equities, and that Bill Supple did call Rockland Trust, who was the manager at that time, and told them that to maintain the equities that fit within our investment policy, and that in the sale of the other equities that they were to use to try to get a broker who would do it for a lower commission than their normal commission rate. The normal commission rate at that time was 9 cents, and they did it either for 4 or 5 cents. I believe it was done for 5 cents in the elimination of the portfolio that they did not want to hold. He also, Bill Supple, did recall that whenever a portfolio came in or a trust came in talking about the income could be distributed, he said, we always interpreted that to mean 4% of the corpus of the fund, simply because income can be defined in a variety of different ways. Is capital gains income? Or is it just capital gains? Is income just dividends? Is it bond interest? So we have always had this, and we have done it since the very beginning with this fund, and I might add with every other fund that we have received. Although in every case, we've called people in the fund and explained to them that that's what income meant. And that was always approved, but no one recalls the specific conversation of 13 years ago regarding this particular fund. So I will,
I do not recall that, but I will go back to our files because every communication I've ever had about a trust scholarship, a trust or a scholarship, I put into the file. So if you will allow me tomorrow to go back into our files and see what I can, what's in there. I may have something that will inform that. More likely, I won't have anything, but I would like to check.
yes, while you're checking, if it's possible for you to check the amount of money we gave in scholarship each year since the inception of this fund, I think you will find it was always 4% of the then corpus of the fund.
Okay.
So the first year, I do remember it being $8,000. And I do remember us keeping it at that level, that 4% level throughout the time that this, each and every year. And we want to make sure that we do the right thing here.
Yep.
And if you need a vote from the committee, we will be happy to vote or discuss it. And maybe I can let Hayden and then Dan speak to this issue in terms of their views.
Sure. Thanks, Joe. So I'm looking at a letter that's in our file for this scholarship, and it is from, it's from an attorney to the public schools from 2006, and it's talking about, it's referring to income being distributed from interest income in that year and over what periods should we calculate interest income. So it really seems to be, at least in this memo from the lawyer to the school, referring to income. I could share my screen, but it seems like that's disabled here.
Okay, thank you.
Evie, are you able to let me share a screen? Maybe you could make me a co-host or something.
Yes, it's fine with me. I don't, is it Evie to decide?
Well, I mean,
Evie is the host.
Joe, if I may.
Yep.
With all of these trusts, their bequests, we have to go by whatever the trust agreement says. Some of them are not specific and are left to the commissioners to decide the dollar amount. Some are very specific and some are a little more liberal. I can read directly from the trust agreement. The principal, according to Mass General laws, to be left in trust to the Board of Commissioners of Trust Funds of the Town of Needham, who shall manage and control same and distribute the annual income for a scholarship award to an outstanding mathematics senior class student, selection to be made by the headmaster and the faculty of the math department of the high school, to be known as the Charles and Bernice H. Siegel Memorial Fund. So having said that, as of June 30th, the interest and capital gains earned on that particular fund for FY 20 was $10,621.45. In addition, there is an expendable balance of $40,260 currently in that fund. So if to go by, going by the trust, I don't know, past years, I don't really know how we came up with that $1,900. I really don't know. But I think going forward, according to the trust agreement, you would give the annual income, which in this case is $10,621, which just so happens to be 4%
Right.
of the book value. So that may be coincidental, but the decision is up to the commissioners. But I just wanted to let you know, this is what the agreement says.
Mhm.
And that's how we should go forward, I believe, but it's up to you.
Well,
that's an interest.
go ahead, Dan.
Joe, go ahead. I think
Dan,
it's an
you're up.
interesting coincidence that it happens to come out to 4% because the way we sort of allocate realized gains to these trusts has always not made all that much sense to me, but it is somewhat arbitrary. Like if we had happened to have realized losses, for example, in a year, would we now be allocating less? So my reading of the trust document would be to ignore the kind of accounting fiction of these capital gains and just go with sort of dividend and interest, kind of pure income.
The
Ooh.
capital gains on the account were $3,613, rounding.
And what was the
That was
dividend?
capital gains.
Well, what was the interest and the dividends?
Well, let's see,
Do they break it out?
so 7,000. Yeah, $7,008, $7,009.
So to kind of support what Dan said, I mean, I'm in favor of a bigger amount than 7,000. I do like the 4%, although it's still up for grabs whether that's, what they had in mind. But the problem of including capital gains is there'll be years potentially where there's no scholarship because the capital losses are bigger than the income.
Or years where we could end up distributing 6 or 7%, just depending on the size of the
Right,
gains that are realized.
Remember also, there is a $40,000 non-expendable, keep saying that, a $40,000 expendable piece
What is that
sitting in the
piece?
trust. That means that 40,000 can be spent.
At our discretion?
Well, remember, we got to go by the trust.
I
And the
know,
trust says
that's what I'm asking.
So if, like, I think alluding to what Dan said about if there are losses during a given year, you have that $40,000 as an expendable piece that you could award to maintain some level of consistency on the award that you give. You understand what I'm saying?
I think so. So the 40,000, I don't recall the details of what it said, but you're confirming what I asked, which is that 40,000 is kind of at our discretion as
Yes,
to, okay.
yes.
If
That's
we could
income
start,
that's been earned over the years that it's been sitting there and not distributed. So that's
Oh,
available.
okay. That's undistributed income if you include capital gains.
Exactly.
Okay.
But I believe that Anne would like to have a consistent procedure so that each year she doesn't have to come to us and ask us what our feeble opinion might be.
Well,
Uh,
I think it's helpful to confirm prior to the award booklet going out, even if it's simply a quick confirmation. I do think that's valuable, but as trust fund commissioners, you should be determining what the income is and what that represents. So
Okay.
well, the income it seems clear to me is the $7,000. And then if we truly do have the right to distribute, more, if we have the right to distribute more in order to meet a $4% kind of target of what we feel is best, could we dip into this $40,000 that's sitting there,
Yes,
Right.
or in a given year choose not to?
yes.
I don't have a strong opinion on that. I don't really understand. I guess this is money that in theory could have been distributed in prior years, but wasn't.
Right. Because we went with 4%.
Yeah.
So it sounds, if I may, it sounds like pending Ann's research that we do the usual 4% because we have that ability to get that between the income and the undistributed capital gains from prior years. So why don't we do that?
I will entertain a motion to that effect.
Okay. Do you need me to re-say it or?
No, it's good enough for me if I
Gonna
can
need
get a
a
second.
motion.
But
It's
our-
gotta be in the minutes.
But are we simply saying that it's 4%, or are we saying that
We're saying that for this year, it's $10,000. That's
Okay.
what we're saying.
Okay.
Which
which
includes
is $7,000 of interest, and we're drawing 3 from this additional previously undistributed income?
yes.
So-
Is that $10,000 even or 10,621?
10,000 even would be best.
Can I just clarify that? Because the 10,000, are we utilizing the capital gains piece, Dan, the $3,600?
Yes.
Or are we leaving the capital gains piece and taking it out of the 40,000?
I mean, my interpretation would be take it out of the 40,000 because I don't really see
I concur with that. Again, all of this is pending and coming back to us with some insights that you may have.
Or not, whatever the file contains.
Right, right.
I
So
also
seven-
think, Evie, that you've got to give me the name of that lawyer and I've got to track him down and have a conversation with him.
So 7,000 from income and 3,000 from the 40,000 reserve. Technically,
Yes,
right? I mean, just to round off the numbers rather than getting into pennies.
yes.
Could I just clarifying question? So in a future year, are we essentially, pending any additional information that may come forward, identifying 10,000 as the amount or 7,000 as the amount or 4,000 as the amount, or whatever the income is, dividend plus interest or 4%?
I think that we're saying that it's income. But if income is lower than a 4% distribution rate, then we, in our discretion, would try to true up to 4% using this fund, these excess previously undistributed income funds.
Perfect, thank you.
I agree. And just to clarify, income is to include capital gains.
Well,
No, we're
Realized
not
capital
including
gain-
capital gains because then we may have to include capital loss
right. I agree with Joe.
in future years.
Okay, but we have been including it. I mean, that's where the 40,000 came from.
Yeah, that
Well,
includes
that's- yeah,
income
that's
and
the-
gains. It does.
That's okay.
It all lumps together.
Okay.
Let the undistributed amount continue to grow so we can raise the number
Okay,
over time.
okay.
And Evie, I would like to get, I'm gonna get that lawyer's name and see if I can track him down.
I believe it was Attorney Smart if my recommendation serves. But
It was James Kickham. I don't know if he's still
sorry.
around. Kickham. I have a phone number. You want it, Joe?
Okay,
And again, this is a letter from 2006, so
I understand.
617.
Yep.
566.
Yep.
5990. Probably shouldn't.
Can you tell me the name of the firm?
I'm sorry.
Can you tell me the name of the firm and the lawyer?
Kickham, Kickham,
Say it again.
Kickham
Okay, kick him.
law offices.
Okay. And the lawyer himself was,
I'm sorry.
the lawyer himself was Kickham?
Yes, James M. Kickham.
Okay, James. Okay, thank you.
I mean, this law firm just quickly has a website. It seems like it still exists in its same form.
He's still there.
Seems that way, yeah. Trust and estate administration is one of their lines of business, so I assume it's the same law firm.
You know, I do think that we should put ourselves in the position of Charles and Bernice Siegel and say, what did they really want to do with this wonderful gift to the town of Needham? And I think you all know that they wanted to give a consistent gift each year and hopefully growing it by inflation. I think if you were in that position, that was what you would want to do. And so you really have to think that that's what they wanted to do. I'll take comments on that.
Well, one way that you could do that is by saying, I'll only pay out interest every year and let the corpus grow. another way you could do that is by, using this sort of empirically derived 4% rule. And in maybe a more normal rate environment, those two things are, will get you to the same place. It's just that in the rate environment we've been in for a while now, they don't get you to the same place.
Yeah, okay, all right. I agree, but okay.
So I think we're going to need a motion on this, guys.
Okay, I thought we had a motion, but
Oh, we do? Did somebody make a motion?
Hayden made a
The
motion,
motion. Oh, go ahead, Joe.
Hayden made a motion that we spend $7,000 from the income of the trust plus $3,000 from the available expenditure amount. And that was both, I think it was Dan who seconded it, and I'll take a vote now. All those in favor say aye. Please state your name first.
Hayden Traub.
And Burns, I also say aye.
Joe Scalia, I say aye. The ayes have it, and so it passes $10,000. And
Wonderful.
again, it is awaiting further information from Ann, should there be some.
Okay, I will look, and whatever we have in our files, I will send to Evie tomorrow and share that with you all.
Okay, thank you, Ann.
One question I had raised, and maybe I think we agreed we wanted to get through this issue first and then solve this other question. Is there any way to change this? Because I think we all agree that a 4% rule is maybe more in line with if we could kind of go back and ask them what they would have wanted. So obviously we're dealing with, people who are deceased or whatever. So I don't know the way that we could, in theory, amend this, or who we would even go to recommend it. If there's probate or any such thing involved, then maybe it's just not worth it. If there's someone living who we could speak with who would have the power to amend it, could we find that person?
Dan, why don't we wait until I either succeed or not succeed getting in touch with Mr. Kickham, the lawyer?
There may be family members still alive around that it could be discussed with. Other than that, and I know Ann has experience with this, she went to probate for a lot of the school trust funds. For example, the Dwight School, which didn't exist anymore, they were able to change that so that they would go to the Newman School, I believe.
Mhm.
And the town's attorney took care of that for us. So we do have a new attorney, which his name is
Chris Heap. Chris Heap.
and I could approach him and see what would have to be done to that. But yes, like Joe said, do your research, and then I can engage the services and even have him attend a meeting if you'd like, if he's willing.
Yeah, we can wait till this COVID thing is over. It's obviously going to be over in 6 months or so. So we'll meet together in person. But for this year, we've got it nailed down, and now we're worried about doing it for next year. But the good news is we have 12 months to get it done.
So are we all gonna get takeout sandwiches and meet up on the town common around Christmas time? Eat outside in the cold?
Let's,
I was gonna ask that. I was gonna ask that when we decided on the next date. Yeah.
Sorry to jump the gun there. I think we still have one or two more orders.
let's hold that off until the meeting is as close to being over,
Okay.
because we have another big item to do. And Ann, you're welcome to stay. We're just going to discuss the investment policy, or if Dan or Hayden have anything else to bring up, we can do that. too.
Actually, before we get to that, Ann, did you need any other feedback on all the other scholarships?
Well, thank you. I was happy, I was hoping to actually get a confirmation on the other amounts or a correction, depending on what the case may be. And I don't have to receive that tonight. I just want to make sure that we are all in agreement on the amounts before they go into the booklet.
I have no objection to any other item. In fact, to the extent of my knowledge, they all seem to be correct, to the extent of my knowledge.
I mean, without seeing this in the context of the sort of full balances and such of these. I can't really say, but I mean, I'm willing to defer to you on this one, Joe.
I can send everyone out the balances. These would be June 30 balances. So that you can, I can send them the spreadsheet.
Are we going in circles here, though? Like, where did these numbers come from in the first place?
I'm sorry.
Where did these numbers, these individual award amounts come from in the first place? I mean, I assume that we calculated them
Yeah.
and gave them. to
Yes,
them?
they came from the treasurer's office,
Okay,
based on the wording, legal aspects of the trust itself.
okay.
Now, I have all of the letters that are sent to me that I can forward, that Anne provides with a description, a brief description of the trust, with the dollar amount that's to be awarded, that these are the letters that I normally sign off on. So I can forward those to the board unless you actually want to see the actual trust agreement, and everybody has a book except Joe, because I think Dan has Joe's books.
That's right.
So
Well,
whatever you want me to do, that's fine. I'll
I
send you the
guess-
spreadsheet of the
I
amount.
guess what I would say is, for the most part, we trust your calculations.
Yeah.
If there's any of the trusts that are, debatable, like the Siegel Trust, then, you could point that out, but it sounds like that's the only one that's at issue. Is that right?
I think the others are primary. I don't need to look at them all, but from what I remember, they're pretty specific within the agreement as to the dollar amount.
Okay.
Yeah. I will make one comment on the Acres Fund. The Acres Fund was a 4-year scholarship for each person. So the $10,000, I assume, means 4 different people are going to get $2,500 each, one person being a new graduate, the other 3 being in school now.
I believe it's one person, but the amount that is awarded is actually divided into 4 pieces.
Correct.
Okay, that's the way you're interpreting it, right? Okay.
And then every year, of course, it's going to increase because you've got one person in the first year and one person in the second year, one person in the third and one in the fourth.
That's
So-
how you get to the 10,000, which I think it's 25,
It was 15 last year.
1,500 last year. Okay.
Mhm. And I believe the Sweet Scholarship we discovered did have the language that allowed it to be awarded as a single amount or pro rata across the 4 years.
Yes, and that was brought up before I sent that out to the commissioners. It was a one scholarship that they requested it be spread out over 4 years.
Right.
And, you agreed that that would be fine. I don't know how you want to work it going forward. Do you make it a 4-year or do you make it a lump sum?
Or up to the person's discretion.
You think you leave it to the person's discretion?
I would do it that way, discretion. I mean,
Okay.
in theory, I would think, and I think what happened is we usually just give it to them all up front, but maybe there were like financial aid reasons why they didn't want to get it all in one shot. So,
It could have been financial aid or, you don't know what the reasons were,
right.
but now going forward, I will know that so that I won't have to create such a to-do about it.
Okay, sounds good. So
I actually
guess,
don't see that one on this list. I'm not sure why it's not here.
Yeah.
The Sweet Scholarship isn't here.
Are you looking for which scholarship? I didn't really hear you.
Sweet, it wasn't on the list that Melanie gave me of the Town Hill scholarships.
It was 21,500.
Yep.
Oh,
Well,
looking at the wrong column.
that's okay.
Okay.
Was it the Siegel Gardner?
Sweet.
Sweet.
Sweet was the last name.
Oh, that's right. That's right. No, I have it. William Sweet. Yes, I do. Okay.
So that should
Yeah.
appear on this list
Purple.
as well.
Okay, 2.
So I think we're all set. Did you want to go to the investment policy, Joe?
Thank
Yes,
you so much for your help, everyone.
okay.
Thanks.
Should
And
I-
actually, Ann,
Yeah,
sorry,
should
go
I
ahead.
just change the letter on the Siegel?
Yes, if you wouldn't change it and I guess resend it back and we'll put it in file.
Okay,
But I will go back to our files and send you whatever's there related to any conversation about the income or the, how it was to be awarded, 4% income or whatever.
Okay,
And just so I can get the right title for the minutes, can you remind me your title?
Director of Finance. Yep.
Assistant Superintendent for Finance and Operations. It changed a few years ago.
Okay, Assistant Superintendent for Finance and Operations. Okay,
But my stationery still says Director of Financial Operations, so that's probably not wrong either.
I'm
Okay.
sorry. Sorry, and I don't know if that was a demotion. I apologize.
Whatever.
You
Oh,
keep
that's
track
okay.
of titles.
Thank you, everyone.
All right,
Thank
thank
you.
you, Ann,
Thanks,
for your help.
Thanks, Ann.
Okay, anybody have any thoughts on the investment? Before we ask about any thoughts on the investment policy, did we get anything from Rockland Trust, Evie?
No, I didn't.
Okay.
I was just hoping that one of you guys would get something, but
Okay. Anybody have any thoughts?
Um, I'm still comfortable with the policy as it is, although I'm open for discussion if anybody has things they'd like to see different.
Okay, let me give you my thoughts, okay? I'm really, our portfolio has suffered because of the 4% per sector ruling that Rockland Trust has, which kept us from a lot of capital gains in some sectors and probably saved us elsewhere, but that's their policy. And I have no problem with that. But I do think that in today's world, we are too heavy in bonds. I think we're at 35% in bonds, is that correct?
Yeah,
And I thought that given the fact that we now know that COVID is going to go away, or we think it is, that maybe we could redirect a small percentage, my guess would be 5, and put it into something, either equities in general or more specifically into beefing up the REIT portion of the portfolio to get more income. I'll leave that as a thought for discussion between with you, Dan, and with you, Hayden. What are your thoughts?
Dan, you want to go first?
Well, first at a high level, are we talking about this as a change to the actual investment policy statement or just as more guidance to give Rockland as far as how we want the portfolio invested right now?
Well, I guess it becomes guidance, but the guidance itself becomes a change in the policy statement, because we have it in the policy statement. We say US equities are to range from 35 to 55%, remember,
But
and
Rockland
non-US
won't-
equities 10 to 30.
But Rockland won't vary significantly from the kind of normal position. In other words, they're not going to go in that range in any significant way.
Won't they
So
though? I mean,
going back,
if they
sorry,
have
go-
a view, wouldn't they not hesitate to overweight or underweight relative to the norm? I mean, we've given them big bands on purpose, right?
but their policy has been not to do that.
Hmm.
That's how they operate. I mean, if it was a different manager, they might do it, but they don't.
There's a lot of, empirical research about rebalancing and how if you stick too closely to your targets and you rebalance too frequently, you can destroy some value over time. So maybe we should just make sure they're not sort of deliberately trying, not allowing the bands to be wide at all.
I mean, we can talk to them. My impression is they're not rebalancing religiously,
Right.
but they rebalance periodically to get back toward kind of policy, if you will. In terms of the sector, equal weighting the sectors, that obviously is just a decision they made. It's not anything to do with our policy. So changing our policy won't do anything. But in terms of, I mean, we could change the policy to add 5% to equity, and then that would lead them to increase the equity position.
Right. And what do you think of that, with, given the fact that interest rates are so low and yield so little?
Right.
Do you think we should, at this point, cut back on the fixed income portion of the portfolio as a strategic allocation decision?
I guess for me, I'm not inclined to do it. I don't feel that strongly though. So, but I feel like we are, despite the serious decline that happened in February, March, and technically that was a bear market, but basically we've been in a great market except for that 1 month or so for the last 11 years. I feel like if we're going to do this, we do it like in March of this year, not in December of this year.
I mean, is there something to, keep our equity allocation, but move some of the fixed income allocation to higher yielding income type securities, as Joe suggested, like take money out of tips or treasuries and put them in REITs or MLPs or preferreds or one of those buckets?
Yeah.
Good.
I mean, they're allowed to go 4% in each one of those categories.
But to Hayden's point, they'll always rebalance to the sort of center point there, unless we tell them,
Unless we change the policy.
explicitly. But I don't. Yeah, I mean, I don't. I'd prefer not to amend our investment policy statement just because our investment manager doesn't have it in their process that they can be outside of it. I mean, we could send them a written letter that says, we want, if 30% is the middle of the range for some particular allocation, well, we want to be at 35 right now, and they'll just follow that, if that's our choice. I don't have that strong a view on any of these sort of specific weights right now, but
I will add one thing though. I mean, if we were to add, I'm not sure this is exactly what Joe said, but if we were to add 5% to REITs now, that is a little different than adding 5% to equities in my view, because REITs had a big sell-off and really haven't recovered yet.
agreed. That's
So-
more opportunistic or
Yeah.
Right.
tactical, whatever you want to call it.
And it does provide more income than your typical bond or stock. So in that regard, I wouldn't be against it, but I do think we need to change the policy if we want them to change things.
I mean, I feel the same way, and I don't know how we want to word that, or if we want to word it, but I'd sort of like to let them know that this is a good time for them to get more income into the portfolio, because bonds are yielding so little. And I don't know how to say that without messing things up.
But we don't want to give them the impression they should go chase yield and invest in junk bonds. So I think
No, I know we don't want to do that. That's why I wanted to say we take the money out of the bond market and direct it towards other items, whatever.
Well, we could,
Yeah,
I mean,
it-
we could change the policy to, just to throw something out if we want to go ahead with this. And instead of 17.5% in the Barclays Capital Credit Index, we could reduce that by 3 or 4%, 3 to 5%, whatever the number is.
Yeah.
And add the REIT index to the policy benchmark. If we do that, we need to if we change it to be 4 or 5%, then we also need to change the fact that right now the maximum they can have in REITs is 4%.
Right.
And no strong opinion.
No, I think I think we should do it. I mean, I think we should cut back on the bonds and increase equities with the hope there would be more income producing equities, hard asset types, which is of course real estate.
So
I
are you
think this is-
proposing we put 5% into REITs in our policy benchmark?
How about putting 6? We've got 4 now. I mean,
No, we don't have anything now.
oh, that's right. We don't have anything now. Yeah,
I mean, they can put up to 4, but it's not in our benchmark,
right.
our policy benchmark.
Therefore, you think Rothman just won't ever touch it?
I think, well, I mean, it can fit within equities, and I think that if I remember correctly, I think they have a small REIT position.
Yeah, they do, I believe. Yeah.
Yeah, I'm just looking at. Just looking to see what they have there, if anything. Columbia Real Estate Equity is 1%. I think that's it.
Yeah. Yeah, I'm not trying to play market timing here or anything. It's just that after 30 years of a bond bull market, it's time to think that maybe
I'm not arguing against it, but I mean, it's been a pretty good equity market during that time too.
yeah, I know.
In fact, better, but
Yeah.
I'm okay if we want to put in REITs into the policy
Index.
benchmark.
Yeah.
And I don't view this as market timing. I mean, we haven't changed the policy in like 5-6 years at least. So,
Oh, I know. The last time we did was 2011.
okay, 9 years. So,
And that's when we raised the fixed income.
right.
So maybe you're good at market time.
Well, we shouldn't have raised the fixed income. I think it was only 5%, but
No, it did work out. I mean, anyway,
So, okay. So is this an amendment to the actual IPS, or are we just giving them additional guidance? And if it's an amendment to the IPS, what are the next steps?
well, I think if we want them to do something, I think we have to change the policy benchmark.
If we're going to change, if we're going to change that in the IPS, I just have 2 little administrative observations, which are that some of the benchmark names, the indices themselves are still in existence, but they've changed. So for example, what used to be the Lehman Ag and then was the Barclays Ag, and then it's changed a few times. I believe is now like the Bloomberg Barclays US Aggregate Bond Index. So I think maybe a couple of the other ones have changed. And the only other comment I had there was MLP to some extent implies a very specific publicly traded partnership type structure. And a lot of those companies have converted their corporate structures such that they're now C Corps or other corporate forms. So maybe we could say like pipeline companies or something else that doesn't sort of limit the investment universe.
Maybe we should just take out MLPs.
Yeah.
I'd be fine
happy
with it,
that.
honestly. I don't really like,
Because then, I mean, they always have the discretion to put money in those. Once they're not MLPs, they really are just like any other energy company, in my view.
Right.
Do we want to change that?
I mean, we're non-taxable, so I think MLPs would potentially cause, if you actually invested directly in a partnership, like an actual master limited partnership, publicly traded security, we might actually have tax liability as a result of that, and
Right.
potentially state tax liability. So we definitely shouldn't invest directly. If we did it through an ETF or ETN or something, that'd be okay. We used to own a
Okay.
mutual fund. They owned an MLP mutual fund at some point.
Yeah.
But if it's in a mutual fund, then it's not a tax issue.
Hey, and I like your original suggestion of putting REITs in at 5%. And Dan, I like the idea of taking MLPs out totally.
Sure.
And I don't know if we should change fixed income in terms of its weighting, but I'm happy to do it and not do it.
Say that once more, Joe. I was typing the new wording. Sorry.
Okay, I'd say I'm happy to put in REITs at 5% and make that a benchmark, okay? In other words, a part of the benchmark, and take MLPs out, just take them out.
Okay. Well, but if we add 5% REITs, we have to reduce something by 5%.
Well, 5% fits within the equity portion, so we don't have to reduce anything, although I'd be happy to reduce fixed income by 5% and get
That's what I
back
thought
to,
that's what I thought you were proposing. No?
that was my original proposal, actually.
Okay. So you'd like to add 5% to REITs to the
Right,
policy benchmark
as a policy benchmark, and
and reduce bonds by 5%?
to 30% of the portfolio.
Right.
So it would be 70-30 instead of 65-35.
Right. Okay. We could eliminate the cash. There's really no reason to have cash.
Right,
And these days with it at 0, even less.
There's a
So-
note at the beginning of this policy that says we're holding a little bit of cash just so we won't be forced sellers when it comes time, when it comes time to make distributions. So,
Right.
Do you
for
wanna
an
re-
environment where we're not throwing off 4% yield in total on the portfolio, and then we're making 4% distributions, we would have to sell securities to meet our distribution requirement.
right, okay.
Right. But they're periodically doing that anyway.
Yeah, and there's cash coming in every month, so in terms of dividends or bond interest,
We distribute about $290,000 a year
Right.
between scholarships and all the other expenditures, so.
So how
We
about
move that money probably once or twice a year.
right. We want to lower the cash to 1% maybe?
well, make it 1 to 5. You've got it here 1 to 10, you make it 1 to 5.
Okay, but that's the range. I'm talking about the policy benchmark.
Oh, okay.
I can lower it to 1 to 5, but
Oh, and we have a benchmark weight of 2.5, right?
right.
Yeah.
So I'm trying to reduce the top 3 things, the fixed income / cash,
Yeah,
by 5% if we're going to go ahead with the REITs. So I was thinking we could reduce cash by down to 1%,
okay.
and maybe reduce the credit index by 2.5%, 3.5%, I guess.
Okay,
Does that sound reasonable?
Yeah.
Okay, so just so I can make sure I'm editing this properly. And Dan, did you have anything to add before I edit it?
Other than I think some of the index names here have changed a little bit over time.
Right.
I don't really, it may not be worth our time right now in this forum to go research exactly what they're called now. I think,
I'll research it.
Okay.
I think I know what they all are now, but I'll check it.
Okay,
Okay, so for the record in the minutes.
Yep.
The proposal is change the investment policy benchmark to add 5% to REITs, and I got to figure out what REIT index to use. And does anybody know?
NAREIT, I think, has an index.
right, I think it's
Yeah,
NA REIT, which I think is North American REIT. Is that what that stands for?
Something, yeah.
okay, I'll find out the official name of that.
Yeah.
So reduce cash, as in the 3-month T-bill index, from 2.5 to 1.
Right.
Reduce Barclays Capital Credit from 17.5 to 14, and add in 5% to the NAREIT index.
Right.
And
And
then
okay,
I'll
yeah.
adjust cash above to be 1 to 5.
The NA REIT index stands the National Association of REITs.
So it's just the NAREIT index?
Yeah.
Yeah.
Okay.
I think it's the NAREIT US Real Estate Index.
Okay,
Assuming we want US, there's also a global index.
I think US is fine. So just to clarify, right now, we have ranges for cash, fixed income, and equities.
right,
I'm going to throw REITs into equities. So
Right.
I'm going to change that to say benchmark at 70%.
right.
Do we therefore want to change the range around the equity band? And right now it's 50 to 75.
You can go 55 to 75 if you want. I don't, to me, I don't want to go any higher than 75% in equities under any circumstance.
Okay. So
I mean, I don't know if you think that's a wise idea, but I don't.
no. So we want to leave it at just 50 to 75.
Yeah.
Benchmarked
Okay.
at 70, yeah.
29. Okay.
Fixed income 15 to 50, benchmarked at 30.
29, because we're going to have 1 in cash.
Okay, yeah,
REITs, preferred stocks. All right.
okay.
Do we, right below the equities discussion, it says REITs, preferred stock and MLPs are allowed under the category. Equities are the max of 4% each.
So
You make it a maximum of 5% and eliminate MLPs, right?
And well, do we want the REITs to? All right, yeah, I'll just change it to 5%. That's good. Okay.
And when we see them, we'll talk to them in terms of, because they can go 5% in REITs and 5% in preferred. It just
Right.
takes away from the equity benchmark of 70.
Right.
Yeah, so,
But as of now, they wouldn't go to 4 or 5% in REITs if they can't, if it's not in the policy benchmark. And actually, if REITs are 5% of the policy benchmark,
Yeah.
I don't think we want the maximum at 5%. Should we just take REITs out of that category.
Sure. And
So it'll now
MLP,
just read preferred stock is allowed under the category of equities with a maximum
of
of
4%,
5%.
5%, that's fine.
Okay. Okay,
But when
so,
you have REITs as a benchmark at 5%, so that they'll know that they got to make that bogey, right?
right, they'll add, they will, based on the way they operate, they'll add 4%.
Right. Okay,
Okay. All right.
which they might be at
So-
already, who knows? I mean,
What's that?
they may be there already, who knows?
Right.
Because the S&P has a 4% as a REIT category, I believe. A real estate category.
Either one.
The S&P 500 has a real estate category now.
But
As a sector.
I don't think they include it for whatever reason, because they only have 1% in REITs. Okay, so just for the record, minutes, whatever, we're gonna adjust the benchmark to have 5% in policy benchmark to have 5% in REITs and 5% less in bonds and cash, and it'll be specified in the minutes. I mean, in the policy statement.
Right.
Okay.
All
All
right,
right.
all those in favor of the changes as suggested, say aye. Joe says
Aye.
aye.
I, Hayden Traub.
Dan Burns, I say aye.
Okay, you got it. Now we have our final thing to do.
Whoa, Dan, you disappeared.
I did, yeah. Sometimes the camera goes out of focus, and if I turn it off and back on again, it focuses itself.
Oh, you have that ability. I don't have that ability in my system. I'm either on or gone.
Well, it's good too if you need to yawn or something, turn your camera off first. One needs to do that.
Evie,
All right,
before we
move
set
on.
the meeting date, do you need anything official for the expenses we approved? Do we need to say anything about that or no?
Oh, you do? I'm sorry, yeah, you really do have to. Because I don't know that everybody voted. I think I have a motion, unless I didn't see everybody, but
Joe
just
made the
if you
motion,
would
I
re-vote them.
seconded it, I think, or approved it or whatever.
Let me see if I can find.
Dan, did you
I
send
just
anything?
put it on that email chain, but I have reviewed them and I'm fine with them. So let's just, in the interest of time, I'll make a motion to approve them in this form.
I second.
All those in favor say aye. Aye, Joe.
I, Hayden.
Aye, Dan Burns.
The motion passed and the invoices may be paid.
Okay.
All right. So December, the month of December, if we go to the 23rd, we're in the middle of the Christmas time, which is the 25th. If we go to the 16th, it's a week before that,
Let's do the 16th.
okay? 4:30,
Sure.
and Hayden, once you write up when you get a chance and write up the investment policy statement as amended, would you send it to Evie, and Evie, you can forward it to our folks at Rockland Trust?
You want to, I have everybody review it first before I send it on, or do you just want Hayden to fix them and then send them to me?
Well, why don't I send it to everybody, and then if Joe and Dan can okay it before she sends it, that probably makes sense.
Perfectly fine. All right, now I'll entertain a motion to adjourn.
Make a
Um,
motion to adjourn.
I second it. Hayden?
Okay, so the motion is passed, but before we go, let's all wish each other a happy Thanksgiving and be safe, folks.
Same to you. Everyone stay safe.
All right, thanks, everybody. I second that.
All right, Dan. Okay,
Take care, everyone. Bye-bye.
All right, see you guys.
goodbye.
Bye.
Bye-bye, Ev.